Welcome to the Expert Exchange, the podcast where knowledge meets success, with your host, Joshua Carnes, and expert guests, Mike McNamee and Dafna Gold. Today's show is brought to you by Lion Business Advisors.
The content in this show is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. The Expert Exchange is not a fiduciary by virtue of any person's use of or access to this content. The Expert Exchange is not licensed to practice law or provide legal advice. Nothing contained within this show is intended to be an offer to either buy or sell securities.
Welcome to the Expert Exchange, the podcast where knowledge meets success. I'm your host, Josh Carnes, and on today's show, we're going to be talking about the financial advisor's role throughout the M&A process. For those of you who know me, we have a lot of guests on who are not always M&A related. And so whenever we get to do a show that's M&A related, I get a little bit more excited, obviously. So on today's show, we have expert guests, Mike McNamee and Dafna Gold. They're with the dedicated wealth partners of Raymond James. You can find Mike and Dafna online at raymondjames.com/dedicated wealth partners.
At Lion Business Advisors, selling a business is not just a transaction. You've poured your heart and soul into your business. It's not just a paycheck, it's your legacy. The team at Lion Business Advisors is here to guide you through the process, ensuring your successful exit. Contact the team at Lion Business Advisors at 800-525-3542. That's 800-525-3542, or visit us at lionbusinessadvisors.com. Lion Business Advisors. Let the story of your next chapter begin with us.
So let's get ready to expand your horizons and refine your strategies as we dive into the financial advisor's role in the mergers and acquisition process with our expert guests, Mike and Dafna. Quick introductions here. Mike is in the studio with us today, Mike McNamee, and he is a certified financial planner, a certified exit planner. He prides himself on creating a thoughtful and deeply personalized client experience. He explores and the intricacies of his clients' financials lives, their long-term goals, their short-term goals, and he does all this to craft comprehensive individual plans. Mike is also the director of the National Association of Divorce Professionals here in Austin, Texas, and he's on the executive committee for the Austin chapter of the Alliance of Mergers and Acquisition Professionals. Mike, welcome to the show.
Thanks, Josh.
And then joining us via Zoom or online today, we have Dafna Gold. Dafna is an accredited asset management specialist as well as a certified exit planner, and is an all-around seasoned professional with decades of experience in financial services. She specializes in offering disciplined and comprehensive wealth management approaches. Dafna guides her clients in a range of matters from personal finance issues like college savings, divorce, retirement, trust estates, multi-generational, and legacy planning. Dafna, welcome to the show as well.
Thank you for having me.
Perfect. So before we dive into today's topic, I want to give both of you an opportunity just to introduce yourselves, tell me a little bit about yourselves, and tell me a little bit about the team of dedicated wealth partners at Raymond James. So go ahead.
Dafna, I'll let you start off.
Sure. So my personal background is I'm older than I look. I was a graduate of 1996 University of Pennsylvania.
Nice.
I came out of there. I went to Goldman Sachs in New York City. Was there for about nearly 7 years. Worked on various projects. Had access to executive committee thinking and strategy, which was incredibly instructive. And from there, went over to Citigroup, where we did proprietary real estate investing for high net worth and institutional clients.
Nice.
So anything from large pension funds to individuals building out real estate portfolios, buying buildings directly, funds of funds, REITs, mortgage-backed securities, etc. Saw the writing on the wall with the GFC, left for grad school at Columbia. I studied international affairs and econ, came out and pivoted quite a bit into business development and supply chain for Victoria's Secret. And my last job there was director in business development for Victoria's Secret. So I had the experience of how do you expand and build a Fortune 500 company. Mm-hmm. Then left and ended up sort of combining all of these experiences, a little bit of private equity, and finally dovetailing them all into wealth management with the understanding of how a business grows and develops and bringing them to that exit event. And so
Nice.
there is a natural understanding of not just the financial aspects of what do you do with the windfall and the money in movement, but rather how do you help your company grow to get top dollar or maximize the enterprise value of your company. And that is the goal. And it's something that we do at Dedicated Wealth Partners is that we work closely with business owners and help guide them through the liquidity event. We're not the M&A advisor. We're not telling them how or who to sell to, but we're sort of pitching in our 2 cents of where you might be able to become more competitive in the space. Perhaps there's too much client concentration. Perhaps there's not enough diversification in goods or services or geographic services. Things like that we can take a look at and say, hey, if you add these elements 2-3 years from now, your EBITDA goes up, your multiple will likely follow. Those are the sorts of things that we can add value very quickly.
That's great. That 2 cents I think is completely undervalued as well. As someone who's been in the industry for a while, it's having someone on that side who actually prepares for these wealth events makes all the difference in the world. So glad you're on today, Mike.
Well, I'm not nearly as interesting as Dafna, but I'll do my best. I actually moved to Austin from New York about 3.5 years ago. I've been in this industry now about 11 years, and I've had a pretty intriguing approach to it. I started out as an intern in college, then moved into an assistant role, and I've really kind of learned the business from the ground up, which has definitely helped us from a service model with helping clients and knowing what all their needs are and their expectations. When I moved to Austin, kind of saw the opportunity and everyone moving here and realized that this was just a great place to kind of start a team. I always joke that between my two partners, my one partner is up in New Jersey. That is my father. There is no better way to run a family business than in 2 separate states and 2 separate offices. Go back once a quarter, see each other. And then I met Dafna actually through Raymond James. We met down at our investment banking conference and realized that we had a lot of similarities. And then kind of the rest was history. We've put this all together in the past year or so, and being able to help clients through the planning process has just really been rewarding.
That's awesome. Yeah. So as we get ready to dive into today's topic again, remind everyone it's the financial advisor's role in the mergers and acquisition process. Again, I'm really excited for this topic because I believe that financial advisors on that lower middle market level are a underappreciated value service, and that more advisors should be including you guys and introducing clients to financial advisors sooner and working with clients' existing financial advisors to start that process, because the last thing you want a client to do is have some major liquidity or wealth event and just be out of it. So I'm excited. Let's dive in. I have a couple questions here that we've kind of gone through. So I think it's important to start off, if we're talking about y'all's role in the M&A process, why should a business owner work with a financial advisor prior to selling their business?
I think it all starts you got to start from the ground up. So it all starts with the personal relationship first. Business owner aside, you have to understand who that person is, their family, what their overall goals are, what retirement looks like, what they're looking for in their children. Are they charitably inclined? There's so many things that go into it that a lot of times we'll spend the first, let's say, 4 to 6 months just even really getting to know the family and understanding what they're looking to do. That is a huge part of it, because the business owner has this idea of where they want to be. But I think, like a lot of us know, what does it look like after retirement? I can't tell you how many business owners we've had that once they retire, I get a call 6 months later and they're starting another business.
Yeah.
Or they're bored and they don't know what to do. So being able to do that deep dive and really get to know them better is definitely a great start.
Perfect. Dafna, you have anything to add?
I just think that the business owners that are successful enough to sell their business, right? Because 80% of businesses don't make it to market. The ones that do well are so fantastically good at what they do, and they're so siloed in their business that they don't really know what's beyond their own horizon. And it's our job to pull the focus back and say, you're really great at selling these widgets. And we can certainly talk to Mike's point about what's next for you, right? So we're sort of like a coach in addition to an advisor. But there's all the preparedness of what to do with the windfall. There's a lot of changes in statutes and laws, right? We know at the end of 2025, there's a sunsetting on the estate tax exemption. So suddenly, if you were not subject to that, now you all of a sudden are. There are certain instruments that have to be in place for a few years before the liquidity event, things of that nature that need to get done way in advance. And people don't know that because how could they, right? Just as I step into their shoes and do their business successfully, we are here to offer that unique service that they don't even know what they don't know.
Yeah,
And
absolutely.
to Mike's point, knowing the family well allows you to anticipate where the pitfalls might be that they're not even aware exist, right? You know, you hear the guy saying, "Oh, I'm going to play golf every day and I'm going to be super happy," and the wife is sitting there rolling her eyes, of, "No, no, no," you know. And just sort of saying and asking the right questions more than anything is super helpful. Super helpful.
So if we're talking about getting financial advisors involved earlier in the process for business owners, what are some of the things that a business owner should be looking for in their financial advisor? If they're going to go out there, if they listen to the show and go, you know what, I do need to get a financial advisor involved, what are some of the things that they should be looking for in their financial advisor if they're out there searching?
I think it all starts with finding someone that you have a relationship with. It's a very personal and intimate business. So, I mean, they should be out, they should interview different advisors, they should see who they think is a good fit for them. Certainly making sure that the advisor they're working with is a fiduciary and also someone who has the proper designations, who's done the work and has put in the time to be an expert in that industry, right? So you have a lot of people that are generalists, which there's nothing wrong with that, but we like to specifically focus on working with business owners and people going through life transitions, such as retirement, divorce, widows, etc. And those two things merge together, right? Eventually, one is going to happen, if not a few. So I think taking a look at what that advisor offers and then also how they partner with your other professionals is a very key part to looking at what an advisor is.
Okay.
Yeah, I think that what Mike said, right? So the joke in real estate is location, location, location.
Yeah.
I think in financial advising, it's relationship, 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 because beyond your family's health and safety, this is the next thing on the list that keeps people up at night is their financial health and safety.
Yeah.
And so really being with a steward, with a fiduciary, with someone that takes that seriously. I joke, you know, I'm a mom too. So I serve as a mom to my clients and really offload their worry and say, okay, I want to make sure you guys can live whatever that next phase is. Let me worry about these things for you, right? Let me be the one to lose the sleep. But it's also, in addition to the relationship, it's experience. You don't want someone cutting their teeth on you for the very first time and stumbling into, oh, I forgot about that law, or I forgot about, you know. So the benefit, Mike and I have been in this business for a long time, and you throw this data, and it's truly decades of experience, and we've seen a lot. And so understanding how these transitions occur, the importance of who you choose to lead you through the transition from an M&A perspective, who's selling your business, who you sell to, right? I mean, we can go into this, I guess, a little more in a little
Yeah.
while, but you know, you see the classic equity rollover. Somebody chooses more money up front and they don't do well on the back end because they chose the wrong partner and they went for dollars first, right? And just like you choose your spouse very carefully or a business partner very carefully, you choose your financial advisor and the people that shepherd you through this process very carefully.
Yeah, you know, you hit on it. We with our clients, we focus on the offer in its entirety. That's one of the things that we talk about. It's not always what that dollar amount is. It's what is the
Correct.
offer? What are the terms? What are the conditions? When are you getting that money? Is it annuitized? Is it what's happening? Is there earnouts? All
Right.
that. So really, really great point there. And I think it dovetails into when it comes to the sale of a business, what What is the most critical aspect of a sale of a business for you guys, the financial advisor, in that role?
Dafna, I'll let you start off.
I mean, to me, it's the partner. It's your dance partner. I think it's a marriage. I've seen deals where somebody did really well up front,
Mm-hmm.
and they cannot get to the second exit,
Mm-hmm.
and they're stuck. And the second exit in this case is supposed to be larger, and they put all their eggs into the wrong basket. And then what do? Right? I've seen exits where the way the contract is written, it's a little too vague or it's a little too amorphous, and they end up in this sort of gray zone where they want to push back the payments, and it's not really clear what the consequences of that are, right? So having relationships with the right attorneys that we can send you to, people that are experienced and have been through it before and can anticipate those sorts of issues and paper the deal really well, that's really important.
Yeah.
I think the other advantage that Mike and I have in working for an institution like Raymond James is we have this sort of hybrid of, we feel like a boutique small investment advisory firm, but we have the full weight and strength and resource of what is one of the largest domestic, not headquartered in New York. I think we're the largest investment bank, something like that.
Mm-hmm.
And so we have tremendous resources within our own bank and the departments within that and the relationships within that. When I talk to an M&A attorney and introduce myself and I say I work for Raymond James, oh, Raymond James, I love Raymond James because we do a lot of business in the mid-market space.
Nice.
So, just making sure that you have, I can't stress this enough. It's a marriage. It's truly a marriage. And picking the right partner is everything. Not just as an advisor, but in an M&A advisory firm.
Yeah.
Right? Making sure you got the right person there. Honesty, integrity, understanding the numbers. These are all things that go into it.
Yeah, there's value behind it too, right? So while we have close relationships with our clients, being the quarterback to this process, we have very close relationships with the CPAs that we may introduce you to,
Mm-hmm.
the estate attorneys, the M&A advisors. We've spent the time getting to know these people personally and worked with them before. So when this all happens, it's not like the client comes in and they have these people they want us to work with. We already kind of have the process down between the 3 or 4 of us
Mm-hmm.
that are going to kind of help the client through the process. And I think when you know the assistance of some of these people and you know everyone in the office, it really helps with just making it a smooth process and also understanding the fact that these are people we know provide the same level of service that we do. If an email is sent, they're getting back to you in a timely manner. Everyone is kind of included on the emails. Everyone knows what's going on.
Mm-hmm.
Being able to facilitate that and then also explain what's going on to the client in a way they understand is critical.
I think you kind of hit on 2 things, value and process, right? So it's crazy for me from a M&A advisor standpoint, how many times we run into a client that does not have a legitimate financial advisor in their team. And so often it's this weird dance of introducing financial advisors pre-exit. And so for those business owners that are looking at this, what is the value that you guys add to the process? If they don't have a financial advisor, we're getting ready to exit and we want to plug you guys in, what is the value you guys add to the process if we're already going?
The biggest value, I'd say, is just the hand-holding them through the process, right? And the planning that we do. We always like to tell people, we want to be introduced to that client a year, 2 years before the transaction even happens.
Mm-hmm.
We need to make sure that we understand who they are. But also, too, when you take a look at their business, we spoke on this before, are they even prepared to sell?
Yeah.
Do they have a realistic number that they want to sell for? And then also, what is the gap between what their business is going to sell for versus what they need to retire and live out their life? And then what does the legacy look like from there? So we'll get people and they'll talk to us midway through the transaction, and we're pretty limited on what we could do besides helping them with a little bit of planning because the deal's already gone through. And then they're asking about how they can mitigate cap gains and what needs to be done. And a lot of times it's just too late.
Yeah.
So we really like to meet them beforehand because we want to be able to address all the issues, especially in regards to the balance sheet, right? Are you using personal expenses through the business? How are you showing that? We have a lot of people that just everything's kind of merged together.
Yeah.
The personal and the business expenses. Those are all things that need to be cleaned up.
Especially in the true lower middle market and Main Street market, you get those first-time business owners that just don't know any different, and they never cleaned out as the business grew from their personal to that expense.
And Dafna and I have spoken about that. We sit down with someone and they're the main salesperson or they're the face of the business. And they maybe only sell one or two different products. And we sit there and we're like, well, what happens when you are no longer a part of this business? What does that look like? Who's going to take over? How do your customers feel about that? There's a lot of things that people don't think about.
No, absolutely. It's, and from the M&A advisor role side, it's probably the biggest downfall from someone who's built up a great business, but they are the business. It's, there's not, you're the business. There's nothing to sell. So you better figure something else out.
Right.
Go ahead.
There's
Dafna.
a quote. There's a quote, if I may. George Marshall, the general who invoked the Marshall Plan post World War II, once spoke of his goal was to be as if you put your fist into a pail of water and removed it. That should be the impact on your business, right? Which is to say,
I like that.
no impact, right? So the visual is very strong, and there's a lot of ego involved in building a business naturally. You can't tell a business owner, don't take it personally. It's as personal as it gets, right? There's blood, sweat, and tears, and their families have made often very big sacrifices to get to that point. So you have to be very sensitive to the emotional aspect of selling a business, and people can, it's not such a big deal. It's a really big deal, right? And I'm sure, Josh, you've seen many deals get blown up or sidetracked because somebody's thinking emotionally and not objectively about their business. And to add to Mike's point about most people, the vast majority of their wealth is tied up in that business. And so they might think, well, my business is worth $12 million and the paper comes back at 8. And they're like, no, I'm not going to sell.
Yeah.
Right. And so we can add a lot of value in just preparing them for that and managing expectations and talking to them. And, okay, why do you think it's worth 12? Where did you arrive at that number? Right. And well, it's a best in class. And I'm like, well, what does it mean to be best in class? And just asking the right questions is often really the best part of what we can add to something, because it leads the business owner to their own best conclusions. Right. And then everyone can make better decisions from there. But this is a really stressful, difficult process. And I think having someone that has been there before and can think objectively and help you make those decisions, you have a much better chance of bringing that deal to fruition than doing it with some number in mind on your own.
Yeah, and to piggyback on that, for those M&A advisors listening to this, we've had several clients at Lion where they go, I thought my business would be worth more, so I need to wait. And then we ask the question, well, why do you need to wait? Does it matter the value, or does it matter what you're trying to walk away with? And then when we bring in a valued financial advisor like yourselves, you guys can work the numbers and say, well, here's what you actually need to walk away with, and here's how we can get to that number in a different way. And it can help those clients that are not strategically educated in the financial advisor world of how much money they actually need, if they sit down with the financial advisor like yourself to say, here's how much we actually need to walk away. And then it can help structure the deal moving forward, and it generally makes the process a lot smoother going on. So,
and 2 examples of being careful of, I'm just going to wait until it's worth X is, well, look at the past 4 years.
Yeah.
You need to be prepared and you need to have a plan. People who were maybe wanted to wait and then all of a sudden COVID hit. Or everyone that was like, in 2022, multiples were very high. Businesses were flying off their shelves between actually 2021, into 2022. And now all of a sudden rates are up, multiples are down, and that value that you had 2 years ago is worth even less now depending on the industry. So these are a lot of things people don't take in play. You can't time it either.
Correct.
It's all about just being prepared.
Yeah, and we talk to clients all the time, and in November of 2022 is probably the peak of the exit market. Rates, SBA rates were 3.25%, and multiples were through the roof because of debt serviced.
Right.
November of 2023, rates are over 10%,
Mhm.
and it just doesn't debt service anymore. And so
There's also a lag in that market that people don't understand.
Yeah.
I'm sorry to cut you off, but
No,
right
you're
when
good.
rates go down, if the Fed is truly going to have these 3 cuts sometime in 2024, the expectation that all of a sudden businesses are going to go back to flying off the shelves or IPOs are coming back to market. There's a lag in the private markets or even in the public markets of when you can bring things out, and it's not going to be that quick, right? And so business owners need a strategy of not just how do they get maximum value, but how do you keep your EBITDA up in this? It's the debt stack is harder to manage, right?
I tell
People are
people,
serves.
yeah, I tell people all the time, the lower middle market, we're probably 6 to 8 months behind the real estate market, right? So it is kind of nice if you're looking at it from the side. We can forecast a little bit better on our end on what's going on, but we can see. And so, those of us who had been in it long enough were telling clients a year ago, it's not going to be great. Now's the time to jump if you're going to jump, or you're going to have to hold some long-term stuff. So let's talk about Dedicated Wealth Partners, y'all's group, your team. What makes your team of Dedicated Wealth Partners unique when it comes to preparing for the sale of a business or interacting in the sale of a business?
I think one of the big things is the 3 of us all complement each other very well. Okay. So you have our partner in New Jersey who has about 35 years of experience, especially in the fixed income markets, has seen multiple market cycles and has had that 35 years of experience understanding investor psychology, has been through '08, has been through 2000. That is huge.
Mm-hmm.
Then you have Dafna's experience, especially with working with private equity, working at Goldman, working with Victoria's Secret, and also just really working in the private markets. And then where I come in as a certified financial planner and someone who started in this industry as an intern and has kind of seen this industry evolve over the last 11 years too, and worked from the ground up, we really complement each other well.
Mm-hmm.
Having a team work for you is one thing, but if you have a team full of 3 point cards, then you're kind of there's not much value there. You're all doing the same thing. We all complement each other very well, and we're very good at different things. So when you combine that, it just leads to a great client experience.
Right. And I think the other advantage, particularly for us, is, as Mike pointed out, is not just the experience, but I think that we all lean on each other exceptionally well. We know where the other can fill in and add value. There's no ego. There's no competition, right? A lot of teams don't necessarily get along that way. I can say with really great, conviction, I would let Mike manage my parents' money. I would let Mike manage my own money. He acts with incredible integrity. He always makes the right choice by the client, which is what it means to be a fiduciary, right? It's their needs ahead of ours. I would say the same about myself if it didn't sound so incredibly self-serving. But we do take a lot of pride in doing the right thing, regardless of what it is. And sometimes it's a longer play, right? Sometimes it's sending the fish back into the water in the ocean and saying, you need to do these things and then come back to us in 2 to 3 years. Because if you do it now, you're not going to get what you can get if you wait longer and do these things, right? To your point of what do you accomplish by waiting? If you're just waiting, good luck. If you're waiting, but at the same time working vigorously to increase whatever the multiple is, or your revenue, your percentage of EBITDA of revenue, whatever it might be, right? And just knowledge is power. How many business owners do you talk to and you say EBITDA and they're like, what? They don't even know what that means. So I think there's a lot of education, which we spend a lot of time on. It's very important to us that our clients understand what their money is doing, what their money serves, Once they're invested, we spend a lot of time, and you don't have to do bond math. That's our job.
Mm-hmm.
But you have to be able to explain to me what a bond does and why you own it, right? Why are you in this strategy in the stock market? What does that do for you? Why are we doing these kinds of donations, right? Because a lot of, especially around sales, the big, the 300-pound gorilla in the room or whatever weight it is
Mm-hmm.
taxes.
Yeah.
And making sure we spend a lot of time in preparation for the sale of trying to position the client in the best way possible to offset a lot of the gains in the business. And if you work with a good trust and estate attorney, and if you work with a good accountant, you can add a lot of value. But it's not just any accountant, and it's not just any trust and estate attorney. You want the professionals that have done this before, that know the way to do this, right? There's lots of different kinds of accountants out there. There are lots of different financial advisors, right? I say it all the time that picking what to do with the money and how to invest it is in many ways the easiest part of our job. The complexity and sophistication of a lot of these transactions and understanding the ins and outs or where the dangers are.
Mm-hmm.
And if we don't know the answer, knowing who to go to, that is what I think separates Dedicated Wealth Partners from a lot of our competitors. That ability to leverage not just Raymond James, but our network of professionals that have all been there, done that, seen that, and can address the concerns and issues faced by the client.
So we've talked a little bit about what Dedicated Wealth Partners can do for business clients when it comes to their business and an exit, but what about in their personal lives? Like, having a financial advisor, and most small business owners will tell you it's not just business, it rolls over into the personal life. So where do you guys play in that? How does that work out?
I mean, we're involved in all aspects. The personal, to me, is probably one of the biggest, right? The kids, grandkids, what are your goals for your kids, right? Or what does the legacy look like? What organizations are you a part of, and what does charitable contributions look like to you?
Mm-hmm.
So kind of that's where that personal relationship comes in. That first 6 months that you meet someone, you have, let's say, 3-4 meetings, and you're finding out new information every time. We go back to our process. A lot of our clients are on scheduled monthly recurring calls.
Mm-hmm.
And I'm still learning things about them 8 months, 10 months later that I thought we did a deep dive on and covered in the initial.
Mm-hmm.
But you just start to learn more about it as situations come up. You start to learn more about their fears, what they want to do. That's why I always tell people the financial plan, it's a working plan. When I show them a plan or we go through it,
Mm-hmm.
I'm like, this is a snapshot in time. This is December 24th, 2023. This plan is going to be different a year from now, and it's going to be drastically different 5 years from now. And I think a lot of people kind of respect the fact that it really is a constantly evolving work in progress.
Dafna, too, we talked about the kind of personal stuff, and I saw in your profile legacy planning. So also, how does that play into younger generations and what's going on there?
So it's a really interesting question because, I think one of my favorite parts of this job is the sheer diversity of how people find success in this world and what they do. I know a company that all they do is make aluminum poles. That's it. They make various aluminum poles. There's another company that makes the things that fit on top of the aluminum poles,
Mm-hmm.
right? And then there's law firms, there's doctors, there's, sort of more traditional or well-known positions. And it's kind of amazing to see how all of these people are so successful. And I think that before I talk about the younger generation, though, is our job is to be a coach.
Mm-hmm.
Not for nothing. There's 2 trophies back here from coaching my kids' basketball team.
Nice.
I managed to stick that into every conversation, by the way. And I think we have to serve as coaches for our clients, because for the one that's retiring, they've had a vision of what retirement looks like. They want to buy a house in the Keys or in the mountains, or they're going to go live near their grandkids. The younger generations are a different story. And there are those now that I work with who are coming into very sizable liquidity events.
Mm-hmm.
And the mandate is, I'm giving you 2/3 and I'm taking a third and I'm doing the next thing. Because there's so many serial entrepreneurs that they don't know what to do with themselves and want to continue to work and invent and create. See that a tremendous amount in the tech space where they come up with a new idea and they want to pivot from the one they're in now. And so many of them are so creative. And it's the creation part that they love the most, not the management. And so it goes back to asking the right questions. What does it look like for you? What scares you? What invigorates you? If money were never a discussion, you didn't have to worry about it, everything was taken care of, what would you do with your life? Right? And these are the kinds of questions that you ask, you sort of coach them into their next phase. And then you reverse engineer what you have to do with the money to figure out how to get them there. Right? But I think you need to put the horse in front of the cart and not the cart in front of the horse. And everyone's horse looks different. And you have to figure that out. It's a lot of questions. And making sure not only is the windfall invested correctly, but you also want to make sure that their next venture is as de-risked as you can make it, right? That there's no personal connection. So we talk about the money, but there's the insurance piece and the de-risking piece. How is all of this papered, right? Can it come back on you if there's a failure in the business? Is there asset protection? Is there creditor protection? Right? What is insurance doing for you in this? The complexity of how you set these things up is never ending. But it's our job to make sure that as they pivot from one to the next, that we're keeping an eye on, is what they just came into at risk? How do we take it off the table? How do we make sure that that first sale is now untouchable should the next business fail?
Yeah. That's huge. So it's interesting. You mentioned the basketball trophies. You know, not to derail us too much. Mike knows this. I'm a little bit of a football dad myself, and so
just a little.
Just a little. I serve as a football.
It is Texas.
It is Texas. So it's I serve on the nonprofit board for a youth football program out here in Central Texas, and have coached a couple of youth football teams myself. So I love the coaching aspect of that, which I think kind of dovetails into the next question of you guys on a personal level. Why don't you guys take a moment and tell us a little bit about your individual backgrounds and what makes you guys on a personal level unique to step in and help business owners, if you will.
You know, the big thing for me is just being able to help people get organized, right? From a personal level, I'm very type A. I like everything, it's got its own place. Everything is kind of set up the way it should be. And a lot of times when you run in for business owners, they're wearing multiple hats. Okay. They're not very good at delegating. Not all of them, but majority, they're wearing multiple different hats. They're the sales guy, but the ops guy, it is very rewarding to be able to sit down and help them get organized. And go back to what Dafna was saying about being that coach, where you kind of give them this advice, tell them how to potentially delegate, and then watch as they slowly evolve and buy into your process and how that sets them up for success 1 year, 2 years, 3 years down the road, or even longer. There's just being able to help someone and someone that buys into that process is very rewarding. And I think, as Dafna was speaking about, as being a mom too, and just being caring and being a part of that relationship, I think that's where we really kind of stand out.
Josh, I assume you played football growing up?
A little bit. I like to tell people, if it wasn't for my knee going bad, I would have never gone anywhere. I laugh. So being a part of the youth football program, we've met a ton of ex-NFL guys, and they all ask that, well, where'd you play? And I'm like, listen, I peaked in high school. I didn't go anywhere. I was not a superstar. I just love the game. But yeah.
So a question for you, and I presume to know the answer, but between playing and coaching, has one brought you more joy?
Oh, coaching my kids, 100%. It has been the greatest thing for me and my son. So I'm a father of 3.5 boys. I have my 3 sons, and then I have a stepson. And it has brought us all closer together. And 100% being on the field and watching my boys win and the excitement and the tears, it's the greatest thing ever.
Right. So thank you for falling into that. Exactly. But, and that's the answer, right? So
Mhm.
for me, I played through the beginning of college, and in college, and I've never enjoyed the sport of basketball as much as I've had as a coach. And I co-coached with a wonderful father, and the bromance, for lack of a word, between a woman and a man that's not a
Mhm.
actual romance, is incredible. And the joy that we have of watching our kids develop and go from being afraid to touch the ball to suddenly being assertive and aggressive. And you see it with all the kids.
Mhm.
Um, and it's the same thing in our business, right? You see someone coming in and they're afraid or they're overwhelmed. I mean, how many business owners are not overwhelmed? How many are wearing the hat of the business owner, the family member, the parent, the spouse? Sometimes they're sandwiched with an older parent that's in,
Mhm.
I have a client now who's incredibly devoted father, works very hard, and has a parent in the hospital. Actually, I have two at the moment. So, you get very involved in your family's lives, right? We are invited to parties. We've been to funerals. This is a, we're
Mhm.
all in, right? We lean in and we are in there and we're fighting in the trenches with you. And it's incredibly rewarding. Incredibly. I think anyone that knows the feeling of charitable work or giving back something more than what they've gotten or trying to give back something knows the satisfaction of what it's like to help other people or to coach them up or to help them through something scary and difficult.
Mhm.
Uh, the more complicated and challenging the situation, the more rewarding it is for me, and I think for Mike as well, of knowing that we've added the value of carrying them through that challenge, that obstacle, and letting them get to the next step. It's an incredibly rewarding process when done well and done right. And it's just a very meaningful thing. There's a line that translates to the death shroud has no pockets, right? You don't get to take the money with you. And so, what does it mean to all of our clients to not take it with you? What does that look like for you? And there's no one answer, there's no
Yeah.
one right. It's so different for everyone. And there's a real appreciation and gratitude, I think, towards our clients of allowing us to be on that journey with them. It sounds hokey, but you know, I'm not a spring chicken. And at this point in my life and in my career, that's what I want. Right. And I think it's the same for Mike, certainly, if we want to add real value.
You know what's funny? I think when you get to a certain point in your life, it actually doesn't sound hokey, right? I think one of my biggest wins is a client that I had over 8 years ago. It was one of my earlier clients. And he took a chance on me and I took a chance on him, and we become great friends, and we had a great successful exit. He's done well for himself. And I mean, he did so well that the company ended up hiring him back, and he traveled around and expanded him throughout the US. And he's working on that second exit. But every time he comes back to Austin, we still meet up for coffee or have a drink or have dinner. And, our families have gotten together, and it's one of those things that I again, at a certain point, that stuff doesn't become hokey. It's real, and the connections that you make with clients in life, and the more that you can be open to them, the better off it is. So
Yeah, I think that's it. I think that's
I
why
think
we
it's
do what we do.
powerful to say too, we're not the right fit for everyone.
mhm.
We serve a select number of households, right? We only work with a select number of families and business owners. So, and we tell clients that we're not the transactional business where we're trying to take on as many clients as possible, because then service and process goes out the window. Everything is very methodical in the way that it's done. And we tell people, if there is any doubt about the way you see us setting this up, or if you don't think you're a good fit, or we've had clients that we told, we don't think we're the right fit for them, we let people know, or we encourage them to let us know, because there has to be that trust on both sides.
Yeah.
And if there's any doubt and they're not fully bought in, then everything kind of eventually falls apart.
So one of the things I want to hit on is obviously Mike's in person. Dafna, you're not. So let's talk about where your team of dedicated wealth partners is located. Do you guys have any geographical restrictions on the clients that you work with? What does that look like with you guys spread out?
No, we have no restrictions. So we could work in all 50 states. And obviously, we're located in 3 different offices between Paramus, New Jersey, Coral Gables, and also Austin. We have clients in 8 states right now.
Okay.
And we could actually work in the UK too. I have clients that also are located in the UK. So from that side, we're pretty open. It's just a matter of the relationship aspect of it. And that's where I think we have the advantage of 3 different offices. If Dafna has someone in Austin that has an issue, or she meets someone that's within the area that I can go meet with them, I'm able to get in the car or hop on a plane and go see them. And same with our partner up in New Jersey, be able to service all of our clients in the tri-state area. So I think we have that distinct advantage that has only become more, I don't want to say popular, but more, I guess, accepted in the post-COVID era, where your advisor doesn't have to be in the exact town or city that you live in.
Yeah.
Between Zoom and everything else, you really have a lot of options on who you can work with.
No, absolutely.
And where they're located.
I think COVID not only changed the way that we can work, and certainly the industry as a whole pivoted, but I think people in general became much more comfortable with the process of talking and connecting with someone electronically. I, for one, am not a fan of offices. You can see. I think I make house calls. I think if you talk about something as intimate as this sort of process, do you really want to do it in some sort of sterile conference room with fluorescent lights? Or do you want to do it in your home, where the things that are important to you adorn the walls, pictures of your family, or, your Lamborghini in the garage, or, an heirloom that you've gotten from your grandparent? I just think that it's much easier to connect today post-COVID. I think it radically changed the way we were able to service clients.
Yeah.
And I, for one, am very grateful for it. And, it works. If a client really, really, truly insists on seeing us, we'll just get on a plane. Miami flies anywhere. Mike can get on a plane anywhere. Obviously, the New York area is very easy to access.
Yeah.
So it's not a big deal. And it has yet to be an issue.
No, I agree. I think it's one of probably the greatest things to come out of COVID is the working with someone anywhere. And I think it's really allowed for experts to truly shine, because people can go, I want the best, and it doesn't have to be someone right next door. And so I would agree. It's been great, and glad to know that you guys can work anywhere and do anything, and that's going.
If I could, Josh, I want to add one thing about it, because what happens is, especially if you're part of the older generation, is the sharing of documents, right? People get very concerned about security. And we actually at Raymond James have hired people from the NSA to shore up our cybersecurity. We take privacy and confidentiality very seriously. We have all sorts of sophisticated portals and ways to share information that keeps everything protected. And I think that's important, because not only are our clients and who they are confidential, I'll see them socially and there's no acknowledgement of any sort of business connection between us whatsoever. And making sure that their information remains locked up. We literally, our document sharing is called the vault. And for a reason.
Yeah.
So it's something to keep in mind when you see all these issues of stolen passwords and private information leaked.
So as we get ready to wrap up here, been a great conversation with you guys, and I'm loving it. And thank you so much. What do you guys see the current environment like as we move into 2024 and beyond? What do you guys see the environment like for business sales?
2024, everyone's hoping that the Fed cuts rates. They have signaled that they may cut starting later in 2024.
Mm-hmm.
I still think it's going to be a rather tough environment though for business owners, especially in the sale process, because there's still a lot of unknowns.
Mm-hmm.
There's been talks about cuts. There's been talks about a recession, but in reality, we really don't know what's coming. And it's also an election year. So then there's a lot of political information that is going on. And like Dafna said, there's also a lag in the private markets where although deals have already dried up, I just don't know where the next funding rounds come from.
Yeah.
It's the way they look at companies is completely different. We were in a zero interest rate environment since 2008.
Mm-hmm.
Well, the risk-free rate now is over 5. If you are not profitable and you are not running a business that is producing cash flow, then you're not going to get that same funding round that you thought, or you're not going to be able to exit at that multiple that you thought you would. So I think a lot of those expectations, while have started to be reset, I don't think it's fully happened yet. But we're definitely looking forward to, the farther we get down the road from the craziness of 2020 with COVID and 2021, 2022, I think things will kind of start to moderate.
Yeah, I do think, I think to Mike's point, if you're a cash flow positive company and you have a few years of cash flow positivity, and you are not over 50, over 60, or, hitting 100 million enterprise value, I think there are still deals.
Yeah.
Right. Because if you don't need to take on debt, if there's no debt service and it's serviced by cash, and there's a strategic buyer that's a lot of people are sitting on a ton of cash. They didn't know what to do with their cash for a long time.
Mm-hmm.
And cash was earning, to Mike's point, 5%. Those deals are still trickling and flowing. I think that when you get into any sort of deal that requires any sort of leverage, any sort of debt, I think that's going to take a while.
It's going to get tricky.
It's going to get trickier, right? Because who in the world, knowing that there's pending cuts coming, is running out the door to say, let me go pay this interest rate now, as opposed to if I just wait, I can pay that minus whatever. So it really depends on the size. And I would encourage business owners that face that challenge to remain patient, keep doing whatever it is they're doing that makes the enterprise value that high, and stick to the fundamentals of their business. Pivot, that's where it helps to have a financial advisor that can sort of talk you off the ledge, right? It's a game of patience and waiting, making sure you're partnered the right way. So no panicking, staying calm, and choosing the right partner to walk down with is everything. So, I think it just depends on the size. I think if you're selling for 4 or 5 million and you can find the right strategic buyer that's worth 60, that's a deal that can happen.
To pivot off of that, I tell people, this question's tough because what we're saying now, in a month from now, could be a totally different answer.
Yeah.
I always emphasize, and Dafna and I do this all the time, control what you can control. What you can control is your planning. What you can control is your balance sheet and what your business is doing. Those are what you can control. What our number one job is to manage risk. We can't control what the markets do. We can't control what goes on in the economy or what goes on politically. So you really kind of have to focus on the things that you are in charge of.
Mm-hmm.
And if you're taking care of your business and you're preparing it for a sale and you have all your partners involved and you've done your financial planning, you've had the family meeting with the kids, you sit down, you speak to your advisor on a monthly basis, you're doing all the right things. Everything outside of your control, you've now planned for. And that is where we really kind of emphasize, the planning piece of it, because I'd love to be a fortune teller and tell you where things are going to be. But if I knew, I always tell people I won't be here. I'd be on an island somewhere and enjoying my money. So there's a lot of uncertainty out there.
Perfect. Guys, this has been a great conversation. Very informative for me. Hopefully everyone enjoys it. Why don't we wrap up? Dafna, how can people in the audience get a hold of you?
If you just Google Dedicated Wealth Partners Raymond James, you'll find our website. My name is fairly identifiable as well. Not so hard to pick out. Mike McNamee as well. You can reach us at any of our offices. Our emails are readily available, and we're very responsive. Right, that the flip side to the digital world, making it easy to talk to anyone anywhere, is we now carry our office in our hand 24/7. And both Mike and I have a hard time shutting down. So we'll get back to you pretty quickly. And, we were happy to talk to anyone and answer any questions. And if it's the right fit, great. And if it's not the right fit, we're happy to talk to you and see if we couldn't find you someone that would better serve you.
Perfect. And Mike, how can they get a hold of you?
Dafna just said it perfectly. Our emails is, my email is michael.mcnamee@Raymond James. Dafna's is the same. It's first dot last name at Raymond James. All of our information is also on our website. So you'll have the emails, office phone numbers, office location and whatnot. And then once we sit down and meet with people, especially if they're a good fit, all of our clients also have our personal cell phone numbers. Perfect. So, this is not a Monday to Friday job. We get calls on weekends. We meet with clients on weekends. That kind of Christmas.
Clients reach out Christmas.
Yeah. So it's a very personal relationship from that side. But yeah, we're, always readily available. And if for some reason they don't have our information, Josh, you have my cell phone. So
I do. Perfect. Thank you guys so much for coming on. And for those watching, if you enjoyed the conversation today and you want to keep going, you can connect with us on social media. You can find us on Twitter or X at the EXP Exchange, or visit the website expertexchange.pro. That's expertexchange.pro. And for more resources and information related to today's episode and our special guests, you can reach out to them online at raymondjames.com/dedicated wealth partners. Or as they said, just Google Dedicated Wealth Partners with Raymond James. And remember, success is a journey, and we're thrilled to be a part of yours. Thank you for joining us on today's show.
All content on this show is information of a general nature and does not address the circumstances of any particular individual or entity. Nothing in this show constitutes professional or financial advice, nor does any information on the show constitute a comprehensive or complete statement of the matters discussed or the law relating thereto. The Expert Exchange is not a fiduciary by virtue of any person's use of or access to this content. You alone assume the sole responsibility of evaluating the merits and risks associated with the use of any information or content on the show before making any decisions based on such information. In exchange for using the content, you agree not to hold the Expert Exchange, its affiliates, or any third-party service provider liable for any possible claim for damages arising from any decision you make based on information or other content made available to you through the show. The Expert Exchange is not licensed to practice law or provide legal advice. Nothing contained within this show is intended to be an offer to either buy or sell securities.